Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today in our show, I'm going to get a very special company. It's in the agrochemical space. I'll be giving you some hints. Then you take the name of the company. This one is the company we're talking about. It's an agrochemical company. It's also a beneficiary of the Indian-US trade deal completion. The Q3 gross margins, they have risen, but the last 6 months were not good for the company. And it's, of course, a crop protection chemical company. The stock is down 32% in the last 6 months. It's a total, you could say, agrochemical player, and there are a handful of them. And the answer is Sharda Cropchem. That's the company we'll be talking about, and this is the company we'll be featuring in the KYC segment. But why are we calling this company and why in KYC? This industry itself has seen a lot of cycles, and now it seems like there are some green shoots happening in this cycle itself, and we'll ask the management what led to the strong growth in Q3. Was it the volume, was it the pricing, or is there something else in the international expansion front? Also, another question we'll be asking the management and why we are getting the company in KYC is the volume growth and the margin guidance. Will that be above the 35% mark? Volume growth has been around 20%. So that's where the questions will be arising. The third reason why we are calling this company in KYC is, if you could just show the third reason for KYC, is apart from the volume growth movement, this also includes your other companies as well. And these queries which are there, especially for Sharda Cropchem, this includes your global expansion plans. That is very much important as well. But nevertheless, these are the important points that we are trying to get the companies in. And yes, the geographies, where's the outperformance coming in, and the benefit, of course, the most important thing, the India-US trade deal. On the show, we'll have Ramprakash V Bubna. He's the chairman and MD. He will be responding to all of our queries, be it the trade deal, be it the company specifics, and yes, is there a big up move happening in the agrochemical space or not? Remember, it's a very cyclical play. So it'll be very much interesting to have a chat with Ramprakash ji. But apart from that, let's move on and focus on about the company. This is very much important to understand. Agrochemical company at times becomes too technical for investors, but I'll try to make it very simple going ahead. It's an intellectual property driven company. There are IP rights even in the agrochemical space. That is something to watch out for. They do marketing and distribution of wide range of formulation and generic active ingredients. So it's like a total ecosystem of agrochemical space. Apart from this, the clients are there in more than 80 plus countries, and that is why these trade deals, when they get completed, it offers some kind of stability to even this kind of a business model. That's why it augurs well for Sharda Cropchem. They have procured roughly 3,000 odd registrations, and they have filed around 1,076 applications for the future registrations as well. That is where the IP rights are protected for a company like this. The capex was roughly 400 crores in 9 months FY26. We will be looking at the future capex plans as well from Ramprakash ji, and the revenue breakup, agrochemical, that's still having the majority of it. Roughly 83% of the revenue is coming from this segment. The balance one is at around 17% for this space. Apart from that, segmental revenue, how does that actually stack up? And this is just only taken for the agrochemical space. There are 3 types of that. Herbicides, that's the 43% year-on-year growth which has come in, and that stood out on the Q3 numbers. Apart from the segmental revenue growth which was posted in Q3, let's move on to the other important data, and that includes the geographical revenue. This is the most important thing to look at. Why North America? Right now, recently, the India-European and the US trade deal has been completed. So these 2 regions, they are comprised of 87% of this total revenue. So these 2 is very much important for Sharda Cropchem going ahead. So this is the entire geographical breakup revenue I have given, but the recent triggers are also very much important. Strong Q3 numbers have been there, driven by the agrochemical segment. They have done really well. Let's get into a little bit of details into it. The Q3 volume growth, that stood at around 14%, and there was a change in the product mix also. Gross margins are seeing a strong improvement. Roughly 35% is something which the street is expecting that to be there going ahead. But the benefit, that's the most important thing from the trade deals with the European Union and USA. That is what we are looking at. And of course, the Europe and the LATAM region, that's where the volume growth, LATAM means LATAM America, that is where the volume growth was very strong in 9 months FY26. So this is the entire picture for Sharda Cropchem, but I would like to make you sure that you understand how the KYC format works. KYC has around 8 parameters where we get in a company. This includes income statement, balance sheet, cash flow and return ratios to talk about the numbers. But apart from the numbers, also there are other stories to look at. That includes street trade, how stocks have moved, shareholding, especially the institutional portion, valuations, we are comparing them with different peers in the agrochemical space, and last but not the least, the outlook, be it the company, be it the industry. So these are the 8 rating parameters. The first one is the income statement. Income statement, remember the Q3 numbers have been very strong, so I've added that and I've given the combined number in the 9-month FY26 numbers. The revenue, they have seen a decent growth coming, and if you annualize it, of course Q4 is at times lumpy also, this goes 4,000 crore plus if you estimate for FY26. Decent growth coming in the PAT and the EBITDA front as well, and the gross margins is something which is very much important to look at, and that has also shown a good strength. But remember, the business model of a company like this, you are not going to have a linear move. There will be cycles, there will be lumpiness, and that is where at times the concern comes in. And FY24, you see how low the margins were, just 10%. Now it has gone up to 16.4%. Yes, it's in an up cycle, but because of the business model, there might be volatility if you judge the company on the quarter basis. So income statement is a neutral rating. Let's look at the balance sheet, and in the balance sheet I have simplified it. Rather than giving you a lot of numbers on the screen, I'm trying to give you the top takeaways from the balance sheet itself, that how things have moved. And largely we see the equity size has gone up, but the cash and liquidity, that is a very important point. That's around 826 crore. That means there is a good cash deployment, or maybe you can expect some kind of a dividend or a bonus announcement. But the working capital days, that has also done well. This is a good ratio. The liquidity ratio is improving and the working capital day is also improving. So that is showing a good strength. And trade payables, however, that's on the higher side, and that might be a little bit of concern. So out of 4 points, 3 points have been strong, but net neutral with a little bit of positive liking on that. So we have done income statement, we have done balance sheet. The third one is also very much important, that's the cash flow segment. And the way this business model works, there are variations in the trade payables, trade receivables, and that is why the cash flows will not be very uniform in a business model like that. And this is where the operating cash flows, we were looking at them, they are doing really well, it's decent. And remember, these are the FY25 numbers, by the way, and these are the net cash flow numbers, and that is where the variation comes in. But net, looking at the business model and the overall operating cash flows, it's still on an up cycle, and because of that, I will be giving this a neutral rating when it comes to the cash flows. But let's look at the return on ratios. The first one is the return on capital employed, and you see FY24 was, you could say, a very impactful year. That's just 3% down. It's 21 odd percent, starting to increase. It's around 16%, but a healthy one should be 20 odd percent. The 9-month number does suggest that, and that is why it's on an up cycle. So it's a decent one. And let's look at the ROE numbers also, how they have panned out. The story remains the same. This has also gone up. The 9-month numbers are on the higher side. Largely, if it maintains that 20% return ratio mark, then it's quite, you could say it's a very good company, but there is a seasonality impact, and that is why return ratios, to keep it a balanced perspective in KYC, I would be giving this a neutral rating. So we have spoken about the neutral rating, and also we are speaking about the shareholding pattern, how the shareholding pattern has changed. That's also very much important to talk about. Is there an institutional at play? FIs, you see, they have increased their stake, but slight profit booking has come in. They doubled it, and now they have reduced it to 4%. There's nothing to be concerned about because it's been largely flattish. The promoter stake is still, you could say, flat. Public is there. DIs is also a slight decrease is there. But net, nothing much to actually consider about. Nothing has much changed, and that's also good. That's because stability in ownership is also something which I like. So it's a neutral rating when it comes to the shareholding pattern. Let's talk about the street cred. Street cred is nothing but the returns which have come in to the investors. Last 6 months, that's the volatility which came in, the trade deal overhangs which were there, and the stock fell 32% in the last 6 months. Year to date, the stock has again rallied back. It's up 27%. signaling a good sentiment. And last 1 year, the stock has, despite the volatility, has doubled. So that is a very good news, and congratulations to the investors who are holding the stock for this period. And last 5 years also, it has been a multi-bagger. Stock is up to 191%. So this has been a very strong kind of a momentum for this street trade, but I would still give it a neutral rating because there might be some volatility and profit booking in the counter for the days to come. But come on, let's talk about the valuations. And when we talk about the valuations, largely the agrochemical players come in, and these are the different bigger names also, medium names also, and we have taken a 12-month forward P ratio to understand where does the company stand in terms of valuations. And remember, it's a cyclical industry, so all the industry players move together. Of course, there's some little bit stuff change definitely, but Sharda Cropchem, it's at 16 times its 12-month forward P, and that you compare that with PI Industries, it's on the higher side, 28 times. UPL comes in at 17 times, and if you see, other two stocks are also very much important. This includes Rallis India and Dhanuka Agrotech as well. That is still, it's coming at the cheaper level, but then Dhanuka Agritech and Rallis India also almost there. So that's definitely, it's one of the cheapest players in the agrochemical space. So it's a very positive rating and a good thumbs up when it comes to Sharda Cropchem when the valuations are in focus. That means right now also there might be a ripe entry time for this counter. Let's talk about the outlook, the 8th rating counter. FY26 margins, they are expected to remain at 35%, and remember the gross margins, they have been increasing both YOY basis and you could say sequential basis as well. The second important point for the outlook is the return ratio. They may see further improvement. There's always a saying, ye dil mange more. Of course, a 20% return ratio, you can expect that to go up to around almost 30% and it can sustain. And if it sustains, you can see a re-rating in the stock. Sustained volume growth of 20% plus, that's what the investor presentation had stated. So we'll ask a little bit more about that from Ramchandra ji and the beneficiary of the US-India trade deal announcement. Now, how much the benefit comes, by when it comes, what are the total benefits in terms of money, that's something we'll ask the management. But net, it's a neutral rating I would like to keep for the industry. But yes, the cycle is turning towards the agrochemical space and certain picks were certainly expected to do more. But let's give you the ratings, how the ratings stand, and let's just put out the numbers. There is a good part about the numbers, there are some kind of a negative also, but largely it has been very much neutral. All the 4 numbers I talk about, but remember there's an upcycle momentum going on in the agrochemical space, and that is where the attractiveness comes, and that's why I have called this company in KYC. Let's just show the other parameters, what is there. Is it that gloomy? I don't think so. Let's just show the valuations. Valuations, we have shown a strong thumbs up coming in. Outlook has been largely neutral going ahead, but in all, it is not bad and it is improving, and that is where I give 4.5 out of 8. It's one of the on the higher side on the normal average rating when I talk about this company. And apart from this, let's talk about the management who will be joining us, and look at that age, 57 years of experience. Ramprakash ji is having in chemical, agrochemical and related business, like a sitting encyclopedia, and his education from IIT Bombay. So we will be asking him a lot of questions on the business as well as the industry. But joining us is Ramchandra Bubna ji from Sharda Cropchem. He's the CMD and a huge industry stalwart as well. Ramji, I would like to ask one important question. Is the India-US trade deal is done? Before we start on your earnings, what benefit comes to the industry now, and where does India stand?
India stands in a better position, but as far as we are concerned, we are not very much affected positively or negatively because our products are not freely tradable products. Our products are have to be approved by the government of USA, and there are not many companies who seek these kind of approvals because they are very expensive, time consuming, and not very certainty. So the customer have to buy only from the approved sources. We are one of them, and all the tariff that we are charged are being passed on to our customers, and they very readily and gracefully accept it.
All right, and Ramprakash ji, coming back to the earnings, the Q3 numbers were on the strong side. I was just checking the numbers, be it the volume growth, be it the margins. First, I'd like to know, what led to this strong volume growth, where the geographies were doing well?
See, the European Union geography has been doing very well, and the euro-dollar exchange rate has also been very favorable to us. And the climate has been also very good. The demand has been excellent. That has helped us to achieve these figures in Q3, and it will continue in Q4.
So just to put that in perspective, Ramprakash ji, that gross margins, what are the current levels and what kind of margin outlook we can expect going ahead?
The same, around 35%.
Okay, so the 35% remains the gross margin target for FY26 as well.
Or I would
Okay,
say 35.
all right. And the volume growth, Ramprakash ji, what kind of expectation we can have? Is 20% plus we can see on a blended level?
Yes, please.
Okay, all right. So that means 20% volume growth coming in as well as a margins outlook of 35%. And how the global pricing looking like, of the agrochemical space? Is some kind of a pressure which is already bottoming out? Some larger peers did mention that the pricing is coming back. So how much conviction is there that the pricing is coming back?
Sir, in our opinion, the prices are on the rise.
Hmm.
And the rise is a little slow, but they are continuously rising because we had a very bad phase in 2024, and the industry is coming out of that bad phase, and there's a lot of scope for the prices to still go up.
So there is a scope of prices to go up as well. I was just checking on the working capital days. There's been a significant improvement, 148 days in the month of March. Now it's around 70 days. Any other further improvement you can expect in the working capital days, and what is leading to that?
So the main thing is that we are getting a lot of support from our suppliers. The suppliers are extending us 180 days clean credit, and even if sometimes the payment gets delayed, they don't complain. So that is a very big support. And second thing is our customers are also paying on time because the industry is doing well, the agriculture is doing well, and that is rewarding Sharda Cropchem. We are receiving the payments on time, and we are receiving good credit from the suppliers.
Right, but Q3 has been strong, and you are suggesting that the Q4 numbers, that itself will also be keeping the growth, if not really strong, but at least the Q3 growth would be same. Am I right? All right. Sir, the cash and liquidity, that segment also we see the overall cash has gone up for the company from 558 crores to 826 crores. You are going to keep that for the working capital only, or is there some kind of an acquisition or any reward to the shareholders?
Mainly for the working capital, and more investment is maybe required for obtaining the registrations. So today we are spending about 450 to 500 crores. This may go up because these are very unpredictable. So we are also preparing ourselves for that.
Interesting on that. And Ramprakash ji, the capex incurred was roughly 400 crores in FY26 till now. FY27, what are the plans for the capex going ahead? Any kind of amount which has been earmarked?
Sir, it's very difficult to calculate it precisely because of a lot of uncertainties in the process of registrations, but it could be around 500 crores in FY27 also.
Yeah, that's pretty much interesting. The company is having client in more than 80 plus odd countries. I checked the registrations, that's roughly 3004 registrations, and you're filing 1076 applications for these registrations also. What's the outlook on this? And for our viewers who need to understand what these registrations means, if you could just explain that also to us.
Sir, the registrations are something like an approval, or you can say in a common man's language, license. And every government in every country wants to prevent unauthorized or wrong products into their country because the implications of a wrong product or a harmful product are very serious in agrochemical industries. So the governments want to only allow those products which are safe for the human handling, for the soil, underground water, and the agricultural products that are produced. So this
That's
is a very complicated and
yes.
it is essential. And the most stringent geography is Europe, and the next most stringent is United States, where the rules are followed and seriously implemented.
I was just seeing the product segments. There are three product segments in your agrochemical space. Insecticides and fungicides, they went up 20%, that's fine. But what caught my eye was herbicides. That went up 43% on a year-on-year basis. This kind of growth for herbicide segment, Ram Prakash ji, will it sustain in Q4 also?
As what we are seeing the trend, it will sustain.
All right. And the numbers which you spoke about, the European region, you're getting benefit also for our viewers to understand that the euro is in a very favorable position as compared to rupee, and that's what the beneficiary is, this company. But the LATAM region, that's also showing a good volume of growth, and at times that helps a lot for our stocks in the agrochemical space who are having this exposure. What's your view on the LATAM region? That's called the Latin America.
It will go up. It will go up from the current level because we are venturing into more and more products and more geographies. Brazil is one of the most important countries in Latin America, and we have increased our share in the Brazil quite considerably.
Interesting. And Ram Prakash, you spoke about that the products, new products are coming in. Now, product mix, does that change going ahead? Current product mix, what is there? And maybe 5 years or 3 years down the line, the product mix, what will it be? And if it is going towards the value added, what kind of, incremental information you can share with us?
See, there's a lot of invention and a lot of development in the technology, and more products are being invented and introduced by the multinational companies, which are more safe and more effective for the crops and for the environment. So we are also following up that trend. The multinational companies who introduce a product have a protection by patent for the first 10 years. And as soon as that product goes into out of the patent, we are waiting to register them, or we start the process of registration even before they go out of the patent.
All right.
And that is a good margin and good opportunity.
Great, great. That's a very important thing, Ram Prakash, you have shared with us. But thank you very much sharing the growth prospects of the industry and your company, and best of luck for the future and for Sharda Cropchem. Thank you very much, sir.
Thank you so much.
So that, of course, just to give you the recap about this conversation which we had and the KYC ratings which I have given, largely Q3 numbers were on the stronger part, but remember, it's a cyclical industry, but green shoots are coming, and that's why the stock price has also gone up in the last 1 year. Stock nearly doubled. The valuation still attractive if you look at it, especially when you compare them with the other peers, and the outlook itself is also pretty much decent. Overall, we have given the total KYC ratings of 4.5 out of 8, and that is for your entire reference. That's all, folks, for today at NDTV Profit and KYC. Stay tuned for more companies I'll get for you.